let's go ahead and get to another Joe Weisenthal piece here that I thought was really interesting. Because one of the questions is like, okay, the markets are down overall, but not that much. And it seems like maybe they should be down more, given all of these soft indicators and the manufacturing index falling off a cliff and consumer sentiment and a majority of Americans saying they expect prices to get higher and their own financial situation to get worse. We're already seeing layoffs. You know, everybody's looking at the ports in Seattle and in LA and are like, there's no cargo coming in. This seems like it's going to be really bad. And yet the markets are like, yeah, it's okay. It'll be fine. And so Weisenthal has a theory about why that is the case. And he argues, we can put this up on the screen, that the Trump meme coin chart could be the market's most important chart right now. And I'll read you a little bit of his analysis. But the TLDR is that basically retail traders, the type that would be interested in buying the Trump meme coin, which you can see is up and, you know, has been juiced by this like promotion that Trump is like, hey, the top investors here, they're going to get a special dinner with me, whatever, which is grotesque levels of corruption. In any case, that those types of retail investors have been trained to buy the dip. And so every time the market goes down, they rush in to say, oh, this is an opportunity, a buying opportunity. I've been told to buy the dip. I'm going to buy the dip. So Weisenthal says one possibility is that retail traders who've been trained like lab rats to buy every dip have piled in like crazy into all the old speculative stuff that's worked so well for so long. And so they're buying SPACs, Tesla, and random altcoins like the Trump meme coin. Pull up a chart of Robinhood or anything else you associate with retail, and you'll probably find a line that's significantly above its levels from the start of the month. Meanwhile, professional investors are extremely gloomy. A survey of fund managers from April 15 showed that there hasn't been this much bearishness in 30 years. Other surveys show basically the same thing. Bearishness is everywhere. And so one story you can tell is simply that serious investors are looking at all those charts of port traffic drying up and calculating the impact of tariffs on corporate earnings, while retail investors are piling in like crazy, creating some kind of disconnect between the line on the screen and what a fair value for stocks actually is. I thought that was a pretty interesting assessment, Emily, which would make sense of why perhaps the market isn't moving the way that you would expect looking at these numbers and looking at just what an extreme action, 145% tariffs on China, let alone the tariffs on the rest of the world, what an extreme action that really represents and what a fundamental reordering of the global economic order that truly represents.
Well, and I wonder also, I mean, the degree to which this is influencing, you know, the Trump administration's minute-to-minute policies. Like we remember when Walter Bloomberg, that ridiculous X account, posted that Bessent had indicated, basically misquoted something that Bessent had said in a Fox News interview about a 90-day pause, which obviously ended up happening. But I think one of the reasons the administration probably held out on the 90-day pause as long as it did is because they saw what happened is as soon as Bloomberg tweeted that, the fake account, the market shot back up. And basically the only connection that anyone made was because of this like fake news tweet that was going super viral on X.
Walter
that people
Bloomberg.
Were paying. Yeah, hilarious. Walter Bloomberg. But but that does, right? Like that builds into the decision-making structure for the Trump administration, how easy it is to rejuice the markets with like just statements. And I like that sounds really basic, but it's an important part. Obviously, what they're talking about in the White House, it was the bond markets that Trump said people were getting a little yippy, that fundamentally caused him to do a 180. Whether he was ultimately going to do it or not, I genuinely don't think we know. And so this is, I think the Weisenthal theory sounds completely correct. And the last point I'll say, this is more abstract, but I was listening to an old zero hedge debate over the weekend, and it was like it was about Bitcoin, and one person on each side of the argument, they both disagreed about the state of the economy. You know, I think it was 6 months ago, something like that. And one of them made the point, this is what's terrifying about the economy, is that you can have experts who like spend their entire lives studying this and working in this, and they legitimately can't tell you whether we're in a good or a bad economy. And the Trump administration is coming into that context and saying, this is that means that we can manipulate it in new and interesting, bespoke ways, to borrow a term from Scott Bessent. And what that actually means is it's just a continuation, or it's a dramatic manipulation of this experiment. Like it's a dramatic new variable in an experiment that nobody really knows how it's going to end. Like nobody can tell you how this is going to end, partially because nobody knows exactly where Donald Trump wants to take this and how other countries are reacting. But we've had a month-long glimpse at that, and it's not good for the administration.
I mean, even the importance of the vibes is even in evidence just based on what I was saying earlier about apparently the markets do better when it's mostly Scott Bessent out there versus Howard Lutnick.
Yes.
And like that shouldn't matter because the policy is the same.
Right.
So the fact that one comes in like a more like proper buttoned up Wall Street type package and one is this more like unhinged type of character, also a very Wall Street character, by the way, that shouldn't matter because the policy is not changing. But the fact that you have Bessent out there who can come up with terms of art like bespoke deals and I'm not worried about the shelves and isn't spinning tales about millions and millions of armies of people screwing in little screws and saying ridiculous things like that. The fact that makes such a difference is in and of itself an indication that so much of the market is just about the vibes of the day. And that ends up being very unpredictable. And then the other thing that seems to be moving the market appears to be whatever inside info is being given out to, Wall Street traders to front run whatever announcements are coming out of the administration later, which is something, we had talked about. I believe it was Bessent who had given Charles Gasparino reported on how he was giving out this information before it was public at an investor conference, allowing them to potentially profit on, whatever moves were set to come out. With the Trump coin thing, I just don't want to lose sight of this. Can we actually skip forward to, what is this, A8, and put this chart up on the screen? There's so much going on in this administration that it's hard to keep track. He's offering a private dinner to the top 220 investors in his meme coin. The offer caused it to surge in price, his family's latest effort to profit from cryptocurrencies. I mean, I don't want to hear a word from Republicans about Nancy Pelosi's insider trading. Like, if you aren't speaking out about this, which is just such naked, brazen profiteering, corruption, graft, etc., it is extraordinary. The level of just pay to play that is out in the open in this administration. And the meme coin is kind of like ground zero for that. And we already know. We've already have examples of crypto dudes who put a lot of money into Trump shitcoin and announced it publicly. And lo and behold, their enforcement actions get dropped. Lo and behold, they benefit. And it is so easy if you're, if you are a head of state, if you are a CEO of a company, if you are just some random person who like wants a pardon or whatever, it's so obvious that all you have to do is put a bunch of money to pump up Trump's shitcoin, of which he directly personally benefits, and, tell him or announce it publicly or whatever, and you stand very likely to benefit. So, this announcement, as the article mentions, increased his meme coin value significantly. It had fallen off quite a lot. The Melania coin was basically just like a total pump and dump, run by some of the same people as Javier Milei's affiliated pump and dump scheme as well. And it's one of these things that I just can't let go and don't want to normalize, because the corruption is so incredibly brazen and naked. And yes, many politicians are corrupt and the campaign finance system needs to be reformed. This is at another level. And one more piece before I get your reaction here, Emily, go to A7, the club for the super rich that they are launching, because I really specifically want to get your reaction to this. So this is from Politico. They say the Trump-aligned club for the ultra rich launches in Washington. The launch of Executive Branch comes as Trump World looks to remake Washington. A new club is coming to Washington you probably can't get in. Don Jr., mega donor Omid Malik, and several other investors are launching an invite-only club that costs more than $500,000 to join, with an exclusive post-White House Correspondents' Dinner gathering. According to an invite, brainchild of Malik will be located in Georgetown. Their goal, the people familiar with the plan say, is to create the highest end private club that Washington has ever had and cater to the business and tech moguls who are looking to nurture their relationships with the Trump administration. And by the way, the club already has a wait list, Emily. Just unbelievable that we went from, all this rhetoric about drain the swamp to this.
And yet so very believable.
Oh, yeah.
It's like, but populists have for a long time and still will decry the quote unquote Georgetown cocktail parties. Like, it is a cliche that is constantly invoked by populists, especially on the right in recent years. But what they just did was what they're trying to do is create their own like extra special Georgetown cocktail party. Literally, they put this in Georgetown, which doesn't really have anything to do with it, except for that it's a funny part of them just walking right into this cliche. So the drain the swamp is drain the swamp of the left. It's not drain the swamp completely. Obviously, it's if we're gonna we'll let some people remain in the swamp. It's not a structural change to the swamp. If it was a structural change to the swamp, then you wouldn't have places where you have to pay $500,000 to rub elbows with listen, it's not the same thing as Hunter Biden, but Don Jr. is selling this club because he's like the son of the president, has access to the president, has the ear of the president.
Yeah. David Sachs was hosting this party. I mean, this is an administration official. Like, it's just incredibly brazen. And just one last piece on the, latest corruption circuit. We've got some new info about how much Elon stands to benefit from the work of Doge, even as Doge, by their metrics or their public metrics, is a complete failure, has saved the taxpayer effectively no money. Even Steve Bannon is calling it out. And Elon is set to appear sort of like slink out of town, but put A9 up on the screen. He stands to benefit to the tune of billions of dollars simply from his companies avoiding the regulatory scrutiny that they were previously under from a whole host of agencies. And, this is something, Emily, that we had tracked on this show. There's a particular part of a particular board that was going after Tesla that regulates automated vehicles. And he was very unhappy with them. Oh, they get gutted. The Department of Labor he had all kinds of issues with them and all sorts of allegations against his companies there. They get gutted. CFPB, they were set to regulate Twitter if Twitter was doing this deal with Visa. They get gutted. So it was quite naked. And he's got his engineers over at the, over inside of why am I blanking on the TSA? He's got them over inside the TSA. That's another area that, is a big problem for him. So in any case, this Senate subcommittee found $2.37 billion in legal liability that he is saving just from his efforts to deregulate and defenestrate the administrative state.
No, what he's been doing is sacrificing Krystal nobly. And at the same time, that's a joke, obviously, but what we were talking about, you and I were talking last week, and you made a really good point that ultimately Elon's not in it for like his big goal in Doge is not moving some money around and saving himself a couple $1 billion, whatever. His big goal is like advancing these companies that he thinks are changing the world in this like techno-libertarian way. It's not necessarily about the money, but that doesn't mean the money stuff isn't incredibly, it's so corrupt, and the precedent that it sets going forward is high. It's a completely different precedent than what we had before with like Pentagon contractors. It's not the same thing at all. So anyway,
yes,
all that
it
is
was
to
the
say,
FAA, not the TSA. I'm sorry, guys. Too many acronyms for me this morning.
That's why we need Doge, Krystal. That's why we need Doge.
That's right. They just added another agency. Now I got the digital service, whatever, that I got to remember as well. Although I guess that already existed. Nobody just knew about it or cared about it at the time. All right. Well, with all that being said, the corruption circuit, update from this morning, let's go ahead and get to these Canadian election results.
Hey, if you like that video, hit the like button or leave a comment below. It really helps get the show to more people.
And if you'd like to get the full show ad-free and in your inbox every morning, you can sign up at breakingpoints.com.
That's right. Get the full show, help support the future of independent media at breakingpoints.com.